The physical market has been on fire. It's getting very, very hard to buy 1 ounce gold coins in smaller bars. Most jewelry shops have been running out, so we have a supply problem, said Kenner. Kenner said on CNBC that there was a two-tier market in gold, the one on Wall Street where the bankers continue to gamble. And see, they've been betting on it low to keep it low. Now they're getting called on this. What are they going to do? And the physical market, which is red hot and demand is outstripping supply. I think we're going to get very close where we see the environment where the paper contracts on precious metals defaulting. Now, you know what that means, folks? That's a nuclear, as she says, nuclear bomb if that happens. And it's now happening. And with what we're going to get a massive price increase, the overall prices of precious metals, said Kenner. Also, where he predicted gold to go after the paper market broke down, Kenner said he expected gold to double in price in a very short period of time. It will spike quite fast, he added. If you had an oil rally from 65 to 140 in 9 months, I think it can double in gold in a much shorter period because the market is much, much smaller, Kenner said. That's Jörg Kenner, CEO of Swiss Asia Capital, told CNBC this morning that the flight from paper currencies as a result of global interest rate cuts will lead to a doubling in the price of gold within a short period as demand for physical precious metals outstrips supply, causing paper contracts on gold to default. Ted, we're already starting to see some defaults. Explain to people what a default is.
What a default is, it just means that somebody can't cover their margin calls. Usually you have to sell everything you have in order to cover that margin call, and when you don't have anything left, then you're defaulting on it. It means that you're...
Again, they've been selling gold vault reserves that didn't exist.
They do, and that just means there's nothing to cover. We have short sellers that are in the marketplace, meaning they don't have the gold, but they're still selling it. They're having to borrow it from the central banks to do this. That's where most of the gold that covers short sales comes from. And with the gold prices rising, the margin calls just kill these people that are trying to sell short and keep the market suppressed. But it's like a darn rubber band. It's like you said, holding a beach ball underwater. When that thing comes splashing up, people have these huge margin calls, and that's why the defaults, and that's just going to cause further calamity. But thank God we have the government going to bail these people out when they have problems. I tell you, there was a secret meeting held just last night, and all the central banks of the world, the G7, got together, and they all decided to slash interest rates.
And by the way, those are owned by private families.
Yep, the private families got together. They said, guess what? We're all going to lower the interest rates all at once, and that way not one currency is going to falter against another. Everybody's currency is going to fall at the same time.
That's why falling currency means milk goes up, gas goes up. See, ladies and gentlemen, it's called inflation. Go ahead.
Yeah, it is. That's exactly what that is. Lowering the interest rates is going to drive people out of the paper currencies.
So not only are they going to have massive tens of trillions globally in, quote, funding themselves, stealing money, it's not a bailout, in a criminal vertical integration, but they're also going to lower rates, which they've now done, which further accelerates hyperinflation. I mean, Ted, this is the ultimate perfect storm.
It is. Why else would you have a $50 increase in just overnight from yesterday to today on the spot price of gold? That's because they've lowered the interest rates and they're devaluating currencies across the entire globe.
And Paul Watson cannot get gold in England. He can't get gold in England, and it's starting to happen here in the United States. We'll hear more from Paul Watson on the other side. And Ted Anderson, stay with us. World order.
What we are looking at is good and evil, right and wrong. A new world order.
All right, Ted Anderson, Paul Watson. I'm ranting here because we are witnessing the true New World Order being born through the full financial implosion. First, they had to stage the terror attacks, to militarize the police, put in the control grid for the criminal consolidation over the public. Now they're moving ahead with that. Paul Watson, again, getting into what's happening with the gold markets. Your take on that?
Well, yeah, I eventually managed to buy some gold off somebody's private collection. And he told me that he paid £16 for this old $20 1-ounce American Eagle back in the 50s or 60s, I think it was. He paid £16 for it, and here I am today paying nearly £600 for it. 1 ounce of gold cost £16 back then, but now it costs $600. Why? Because the currency is devalued. Now the dollar is going up, which normally means that gold goes down, but gold's going up as well because the centralized, globalized interest rate cuts have produced a camouflage whereby people can't see that all the currencies are devaluing against each other because gold continues to go up. I mean, today gold hit a record high if it, priced in euros, which shows you that.
Let's explain that by dropping other currencies with the interest rate cut, because then people don't buy those currencies. That makes it look like the dollar's gone up. It's another sleight of hand. Go ahead, Paul.
Exactly. It makes it look like the dollar's going up just because the euro and pound sterling are suffering so much. But in real terms, over the course of the next few years, that dollar is going to buy you less and less and less, which is proven by the fact that even though the dollar is apparently going up, so is gold. That it takes more and more of those dollars to buy 1 ounce of gold because it's being devalued by the unrestricted printing of billions and trillions of more dollars to bank out these crooks on Wall Street.
Now, Paul, I want to let Ted go here in a minute. I want to get into something that's finally gotten the sheeple to look up from grazing to witness the wolves around them. The fact that not only is the former head of Goldman Sachs, who has hundreds of millions invested in it, giving himself billions now publicly, running it, he now has hired his assistant to dole out the money to him. I mean, this is just totally criminal, violates a whole bunch of federal laws, but it's like McCain goes to England, goes to Lord Rothschild's house, raises millions of dollars, every dollar of it a felony, and then the FBI just stands down. I mean, they are practicing criminality in front of us. They just don't care. So I want to get into that, but Ted, you've got a gold offer. You have francs, you have some other coins. I talked to other gold dealers yesterday. I didn't just believe the newspapers or you, though I believed you. I called 4 other gold dealers yesterday, and they said, we're gone. We don't have eagles. We don't have francs. We don't have anything you could get. It's gone. We've got collector coins for $2,000 an ounce. We've got collector coins, $1,000 over spot. Ted Anderson doesn't just have coins that are semi-numismatic that have collector value right at bullion prices. He has it $100+ under what he was offering just a few days ago because he went in and bought a bunch of these. So is Ted marking things up now that it's like he already filled his gas tanks at the gas station? Here's the analogy. Ted already filled, the truck came, and let's say he paid $2 a gallon for the gas. And then he's going to mark it up to $2.30, so he has money to, run his little business and pay his employees and have the lights on. Now, gas just jumped to $3 a gallon. But is Ted marking that up to make a profit because he bought the gas early? No. He's leaving it in the tank at the price he bought it and passing on 70 cents a gallon savings is basically the analogy that fits with the numbers. Ted, is that accurate?
Yeah, that's exactly how it works. I've locked in, and I've got the ability to sell it at the price I do because I've locked in. And a lot of dealers will move their prices up right away, and perhaps I should too. But, the main thing is right now we've got a lot of people that are listening to this. Everybody knows they need to own gold. They're all scraping to liquidate whatever it is they have to get it. We've got phones ringing off the hook, just like everybody else has. And I apologize if you can't get through. There was one point in time I know that we filled up. We got like 36 trunks where we can take simultaneously 36 calls. And I think they all were filled at one moment, and that's, we're working on getting more of that too. But I tell you, at this particular time, it is as obvious as, you got a nose on your face. You also better have gold in your pocket. You know what I'm saying? That's just the way it is right now at this time. You've got the central banks of the world simultaneously trying to drop the interest rates to hide the fact that one currency is falling against the other. And then the commodity prices come up $100 an ounce just from Monday to today. And I've got something that I picked up last Friday, and I'm offering it to you at Friday's price, and I can hold on to this for just a very short period of time, and then I'm going to have to raise my prices because I've sold out.